So, if you are not able to hear me clearly, please shout them out to me. And if you have any questions, please do type them out and I will try my best to address your queries. Now, before we begin, I will quickly go on into the disclaimers just to highlight to everyone that this information prepared is for general circulation. It does not take into account the specific investment objectives, financial situations, or particular needs of any particular person. So therefore, what we do have over here is for general research. Please take that into view. Okay, so continuing on to this week's week ahead outlook. Really from an Asia perspective, where I am sitting here in Singapore, this is the calendar that I have constructed, and really it's based on Singapore time. So have a look at some of these items which I've also highlighted in bold, and I'm happy to take any of your questions surrounding this. But just to go through what I am looking at, I think this is a big week for central bank meetings, particularly from the Bank of Japan and the ECB. And I think, in fact, with what's happening there, it's really stalled a little bit of this US dollar down move, which I still have very strong conviction for the short dollar trade. In fact, the bearish positions on the US dollar actually rose in last week based on the latest CFTC commitment of traders report. So this is something that I think the institutions themselves are still sticking with. But this week, I think these two central banks will provide us with quite a bit of, well, stalling to the current trend and something to look out for in terms of their guidance ahead. Data-wise, we have the Eurozone and the US market PMI data, manufacturing data for both of which are expected to moderate slightly. So how that plays out, I think into the end of 2017, we have seen it actually contributing to some of this move for Euro US dollar, some of this prelude ahead of the ECB meeting for the Euro, but one to watch out for. And into the end of this week, of course, we have US Q4 GDP. The first reading is due at 9:30 p.m. here for Singapore clients. That's something to really look out for. And this is, I would say, assuming the fact that we do not have the government shutdown prolonging till then, which could affect this non-essential service. I don't think that's going to happen. I'll talk about it in a moment. Earnings release, that's going to be something that we have to watch very closely for those trading indices as well. Of course, this is from the Singapore site where you can actually find a quick table showing you all the out of our shares links. And of course, really this week what we have is quite a better mixture of companies on the S&P 500 index compared to the past 2 weeks where it's really been majority of which have been financial companies. And what we have right now is the better mixture. Is going to give us a better look into the company's performance for the fourth quarter. And we also have Caterpillar that is going to be due on the 25th in the US, which is actually Thursday. And I think that's going to be quite interesting for industrials, for those trading US indices. That is something to look out for. So quickly going through some of the leads that we have right now sitting in Singapore. It's about 5:05 p.m. Many of the markets in the region have already been closed. What we have seen for the markets right now is that it's quite a good mixture. Most of the indices, in fact, are actually up as compared to early morning hours where we have this uncertainty over how market might perform, given that the US government shutdown is expected to continue into today's session for the US. So what we have was that we were actually watching this afternoon here in Singapore for the vote, but it's been delayed into the end of the day for Singapore. So noon in the US, that makes about 1 a.m. Singapore time to Tuesday. And I think that what this vote itself, we have heard a lot of these talks by Senate Majority Leader Mitch McConnell. There is likely to be some sort of I think the hopes at least is that there will be some sort of agreement reached over some stopgap funding for this upcoming vote, and hopefully with that it's going to see the government shutdown come to a stop. But really I think the attention is over how the impact of this will really carry on should we not have the case. I think so far the futures in terms of the US market itself is only seen moderately down, about 1% for the S&P, the Dow Jones Mini, and in terms of how that pans out for the markets open, I think the market will be really holding in consolidation for that expectation. I think that's what we see at this moment. I think a lot of the impact over this current shutdown, the short-term impact, is not expected to be something that is going to be detrimental for the markets, whereas it's really down the road into February when the government comes together to negotiate the debt ceiling that itself may see this impasse actually carry on, have an impact that actually carries forth through till then. So I think it's really not too much of an impact at this moment. And in fact, if you actually look at this table provided with our PL research facts that's seen online, you can see that in fact the government shutdowns in the past may actually even be opportunities for the last, if you just look at the last three government shutdowns that actually happened under the rule of a democratic president. And for Trump this time it's been about 3 days so far, and Monday is the first working day, so we'll see if it pans out in a similar manner. But in fact, given the fact that we have the overall outlook for the government, overall earnings and growth outlook for the economy trending in a positive manner, and the market is still generally very bullish, retail contrarian aside, we can see that this actually may provide an opportunity to get into the market instead. And looking at the market dynamics, well, in fact, as you probably have already known, Friday we have markets in S&P 500 seeing another record close. Looking at how markets perform currently, the Hang Seng Index, just opening up the charts here, you can see that the Hang Seng Index actually charged on further at this moment. It's closed with about 0.43% gains according to Bloomberg. And if you do look at the Singapore market likewise, so the Hang Seng HS50 over here, it's the related market for the HSI Hang Seng Index. It's pretty charged on, touching a record so far, and I think that this is the market that everyone's looking for. In fact, right now I'll say this is primarily trend trade in place, and the stronger one within the market. Now looking at the Singapore index, likewise, I also want to bring this to your attention. I think what we have this today itself is that it's a moment that I've been probably waiting for a while. If you're trading this Singapore index or SIMSCI, the other market for the Singapore market, you can find that prices have actually surged above the 3,550 barrier. It's quite a strong breakout thus far, showing that kind of optimism for what's to come with regards to external leads. The Singapore market one being very affected by what's happening externally, particularly in the US and in the region as well. So I think this is one very bullish trend that we have seen for the Singapore index, and definitely for the rest of this week, we're going to see if this trend could really continue, or we might see a pullback below the 3,550 level. So going back to my charts over here, however, we do have dollar index itself actually coming a little bit under pressure today. It's been actually opening the week itself slightly lower despite what you see over here. So I think what we have with dollar index is that the prices itself did find a slight reaction towards the US market shattering. But having said this, the US government shattering, but having said this, I think a lot of this attention is captured by the central bank meetings ahead. So really, I think the market's largely discounting the impact from the US government shutdown and looking forward to the ECB and also Bank of Japan meeting decision and press conference that's going to be due on Tuesday for the Bank of Japan, Thursday for the ECB. I think what the market really is telling us right now is that the expectations for both central banks, both of which have really shaken the market in the second week of the year via their very hawkish perception to the ECB minutes and also the bond buying in the Japan. It's telling us it's pulling quite a bit of fund out of the US and into many of these super dovish countries whom you really don't expect them to have such a hawkish rhetoric so early in the year. So what I think that these two central banks, ECB's Mario Draghi and also Bank of Japan's Governor Haruhiko Kuroda themselves might actually be more interested to err on the more cautious and prefer to have a more dovish rhetoric. So that itself has not been pulling the US dollar lower at this moment, and into the end of this week, I think the short-term trade for many of the for the related currencies, in this sense, the dollar yen and also the euro USD is the one that's been keeping both stagnant. On one hand, you have the US dollar supported via this central bank's expected rhetoric and also weighed down by the kind of political disruptions in the country. But having said that, I also want to bring you to this attention longer term outlook. I think what we have right now, this is taken from the IG client sentiment, and for those who also read Daily FX, which is a part of IG, you can see that the retail sentiment really serves as a good contrarian indicator to what is happening to the market. And as things stand right now, the net long position for dollar yen, and really I know there's a lot of things over here, but just focus on the top chart, that blue and red line. So right now blue itself symbolizing the fact that net long positions are in play, and they are really rather high at this moment. It shows that the investors themselves a contrarian signal for the fact that dollar yen should in fact be more bearish moving forward. So I think despite what we have this week with the stalling of dollar yen, I think the longer term outlook itself, the bias is still on the downside, and for traders this might even be a good time to actually enter into this trade. So that's really my view for this at the moment. And in terms of the price levels to I think what we have right now is dollar yen trading around 110 spot 70 levels, 75 levels, and that moving downwards to I at 109, slightly above 109 spot 20 levels, and on the upside I would think that the uptrend itself might actually store any further gains. So keep an eye on this trade. I think it's going to be an interesting one for this week. And should you have any other questions, feel free to point out to me. But we've covered indices, we've covered the currencies to look out for this week. Just a quick mention of EMFX, dollar ringgit. I don't think we have many people trading this, probably just a handful from IG clients, but I think it's been quite an interesting one because this is the first central bank so far in Asia. We are expecting a bit of tightening coming through from this emerging market central bank. So the Bank Negara Malaysia is expected to lift their interest rate by 25 basis points to 3.25% in Thursday's meeting. So the ringgit itself is one that is really very much linked towards how oil prices have been performing, and after back 2 years ago when we had that YMDB incident that's brought dollar ringgit up through the roof. Right now I think it's trading much more closer to fundamentals, and I think in terms of the short end itself, shorting this dollar ringgit itself, I think that's going to gain a little bit more momentum moving forward to see prices going back to fundamentals. In fact, if I just look at the year-to-date returns of how the currencies have performed, ringgit is actually one of the best performers against the rest of the Asian currencies, gaining about 2.9% against the US dollar, and this is about your one compared to your 1.7 for the ringgit, or about Sing dollars 1.2%. So I think this is one currency to really look out for moving forward. And with Thursday's meeting, that kind of reaction towards the guidance that could come from the Bank Negara Malaysia, likely to be one of the hawkish hike as well, will be an interesting indication of how things may move forward. So if you have any questions or any in terms of views with regards to what time this should be, I'm still really testing a good time for this webinar that I'm holding on, please feel free to shoot them out to education at ig.com.sg, which stands for Singapore. And I will look forward to hear anything that you might, any questions. If not, thank you so much for being here today and wishing you a good week ahead.